Okay.
Thank you. Good evening and welcome to the Finance and Claims Committee of the Common Council for today, Thursday, January 12th, 2023, beginning at 7:28 p.m. I apologize in advance for the late start, but we'll move right through the agenda. Starting with the roll call of the Common Council members of the Finance and Claims Committee. Councilmember Jen McMurr.
Here.
Councilmember Nora Dejelsky-Eichner.
Here.
Councilmember Diana Revelous.
Here.
Councilmember John Kides.
Here.
Councilmember Brian Meeks.
Here.
And Councilmember Greg Burnett. We have a quorum. Thank you. Moving on to public participation. We did not receive any emails for our meeting tonight. Do we have anyone who has their hand raised that wishes to speak?
I don't see anyone with their hand raised. If you'd like to address the Finance Claims Committee, please raise your hand electronically. I do not see anyone, Chairman Burnett.
Okay, thank you. So we will close public participation at this point and move on to item 4 in the agenda, which is approval of the minutes of the following Finance Committee meetings. October 13th, 2022. Do we have a motion to approve those minutes? Thank you, Councilmember Nora Dejelsky-Eichner. Do we have any additions, deletions, or corrections to those minutes? Okay, hearing, seeing none, I'll call for the question. All those in favor, show by the sign of aye, raising your hand, or verbal aye.
Aye.
All those opposed have the same right. Any abstentions? I see Councilmember Jen McMurr as an abstention. So the minutes are approved. Moving on to the November 9th, 2022 Special Joint Finance and Claims Committee and Board of Education Finance Committee meeting. Do we have a motion? Jen McMurr, thank you. Do we have any additions, deletions, or changes?
A small one. My name is misspelled. It's Jenn.
Great, thank you. And also on page 2, paragraph 5, there was one word, just a typo. The word was RECUE, and the correct spelling should be the word reduce, REDUCE. And also on page 3, in the second paragraph, it referred to Mr. Armani as Mrs. Asmani, so that needs to be corrected. Any other changes to the special joint meeting minutes? Okay, hearing, seeing none, I'll call for the question. All those in favor of the minutes with the necessary changes, please raise your hand.
Aye.
Or verbal. All those opposed have the same right. Any abstentions? The minutes are approved. And then finally, the December 8th regular meeting minutes. Do we have a motion to Councilmember Jen McMurr? Thank you. Do we have any additions, deletions, or changes? I saw one on page 4 in the first paragraph. The word to should be added where there's just an O paragraph. If there are no other changes, I'll call for the question. All those in favor of the minutes with the necessary changes, please raise your hand or verbal aye. All those opposed, thank you. All those opposed have the same right. Any abstentions? We have one abstention, Brian Meeks. Thank you. The minutes are approved. Moving on in the agenda, the items 5, 6, and 7 will be covered by our tax collector, Lisa B. So on to our Claims Committee report for January 2023.
Can you hear me?
Loud and clear.
Great, thank you. Good evening. I actually have 4 agenda items for you tonight. The first one I can dispense with fairly quickly. It is the claims report, and it is for informational purposes only this month. There is nothing in excess of $10,000 that requires your vote. So that I will, unless you have any questions for me on that, I will pass it over and move on to the monthly reports for the end of December. You can see that we are where we need to be at 62.35% of our 0.25%, excuse me, percent of our adjusted current levy. We did mail our second installment bills later than we normally do. They were mailed on the 30th of December. And in spite of that, our December was fairly robust because the escrow agents were paying based on transmissions that I had sent to them right after Thanksgiving in November. So we got a fair amount of real estate collections during the month of December. But now that January has come, our Norwalk taxpayers did receive their bills around the 3rd of January. So collection cycle has begun in earnest. We do accept walk-in payments at City Hall. We also accept walk-in payments at 10 bank branches, which is a really nice service for your constituents. In case you're not aware of it, they don't have to be a customer of the bank. They can just walk in with their bill. We retrieve the paperwork for those payments, and then we post them in our office. It enables people who live or work close to one of the participating branches to pay without coming to the City Hall campus and navigating our parking lot and so forth. There are some taxpayers who prefer to pay online. Of course, we offer that by phone, through the mail. So we are right in the middle of the collection cycle now.
Sorry,
don't
Lisa,
know-
where can we find the list of banks that are offering that service so we can pass that along?
It's on our website, and it's basically, it's the Norwalk branch offices of Fairfield County Bank, Patriot Bank, Affinity Federal Credit Union on Westport Ave, Webster Bank, Bankwell on Westport Ave, and Norwalk Bank and Trust.
Thank you so
So
much.
there's 10 participating branches. There's 5 Fairfield County branches, and the other banks have only 1 branch each. But it's a really, really nice service. The taxpayers who use it are very fond of it. And again, no cost to them at all. I don't know if you have any other questions about the written narrative. If not, I will launch into the other item that we have for you, which is item number 8 on your agenda. We are requesting, in accordance with Connecticut General Statute 12-142, a delayed due date and pay by date for our motor vehicle supplemental bills. Now, normally what happens is we send this particular subset of bills at the same time that we send our second installment bills. And what the motor vehicle supplemental is, our grand list date for these current taxes was October 1 of 2021. If you had a car on October 1 of 2021, you got a bill this past July. If you registered a vehicle on October 2nd of 2021, we would be sending you a bill now. And it would be anybody who registered a car, first time registration, not a renewal, but a brand new registration for them between October 2nd of 2021 and July 31st of 2022, we owe them a supplemental prorated motor vehicle tax bill that normally would have been due January 1st, payable by February 1st. We were not able to get those bills in the mail by January 1st. We were able to get everything else in the mail, but not the motor vehicle supplemental. So the Board of Estimate and Taxation in Norwalk is the rate maker. By statute. They set the tax rates. They also set the due dates of the taxes, but the Common Council is the legislative body So in order to cross every T and dot every I am bringing this proposal before both bodies. I went before the Board of Estimate on Monday. I gave the same explanation to them. They offered their approval for the proposal, and now we are bringing it to you. And what we are proposing is, instead of due January 1st, payable by February 1st, for this subset of bills, we would like to have them due March 1st, payable by April 1st. We are talking about approximately 15,000 bills for 15,000 vehicles. And I expect that the levy will be in the neighborhood of $4 million, slightly more probably, but that's what we're looking at here. And I'm glad to answer any questions that you might have, but that is what we are seeking. If you grant the approval, we will be issuing those bills as soon as we are able to. It will most likely be in advance of March 1st. The sooner we can get them out, the better. But the taxpayers will be able to pay until April 1st without any interest penalty.
Question. Could you just repeat, what is the dates again?
Yes, the grand list date is still October 1 of 2021. And these bills are for vehicles that were newly registered between October 2nd of 2021 and July 31st of 2022. And it's a prorated bill.
Well,
I'm sorry.
No, go ahead. What I was looking at is you're asking for an extended payment period. So
Normally,
maybe in this,
they would have been due January 1st, payable by February 1st. And what we are requesting is due on March 1st, payable by April 1st, because by law, we are required to give 30 days grace period to pay without interest penalty.
I guess my question comment is, should those dates be included in this proposal request that we are, to be specific, we're extending the due date and the extended period and include due March 1st, payable April 1st.
The way the Board of Estimate handled it was when they made their motion, that is what the spoken motion said. At the time that we prepared the agenda, we weren't sure what we were going to be asking for, to be honest with you. We weren't sure whether we were going to be asking for a February 1st into March period or a March into April period. And we find ourselves now halfway through the month of January, and I'm trying to be conservative with these estimates. I don't want to have to come back before you again if we were not able to get them out by February 1st. But I would think that perhaps when the motion was made, that's how the motion would be, that to allow this payment period to be with taxes due on March 1st, payable by April 1st, but only for the motor vehicle supplemental, not for any other taxes that are already out there being collected.
Understood. Thank you. So by not putting in a specific date allows your team to have a little more flexibility if need be.
Well, the Board of Estimate did give us the date of March into April. They voted on a March 1st due date and an April 1st pay by date. But when we were preparing these agendas, we weren't sure what we were going to be asking for, hence the absence of a specific date in the agenda. Does that answer your question?
I think when you read the motion, it should include the due date of March 1st, 2023, and a payable date by April 1st, 2023. It's just when we prepared the materials, we weren't sure what we were going to end up with.
Now that we're sure, I think the motion should include the date, and that's what we're going, and the date should be included in terms of what we bring forward to the full council.
Yes.
Please. Yes.
Right. So, okay. So we'll include, when we call for the vote, it'll include the dates.
Yes.
That was my only question comment. I don't know if any other members of the committee have any questions or comments.
I have it also in the narrative. I did put those dates in there. So it's part of the narrative on page 2. I gave you the statutory site and I sort of explained what we were doing.
I see one hand raised, Councilmember Brian Meeks.
Yeah, hi. I'm looking at the schedule where you have original levy for personal property tax is 26.2 million. It's now corrected to 21.8 million, a drop of almost 4.4 million. But my question goes to the 13.3 million collected so far. Is that kind of in line with where you expect to be this time of year?
Yes. For business personal property, yes.
Okay. And then just following up on that, the original levy, 26.2 million, that comes from assessment, right?
All of the levies come from assessment because the assessor, their function is to discover, list, and value. And then based on what they give us, we apply the mill rates that are set by the Board of Estimate and we come up with the taxes.
Okay, so if I look back at last year, it was around just rough numbers, it was around 22 million. So we forecasted a 4 million or about a 13% increase in personal property assessment in 1 year. Is that correct?
I would defer to the Director of Finance and the assessor because I'm just the tax collector.
Oh, I understand. You're just going with the information, but I think that helps me understand a little bit about how those cash flows work. Thank you.
Any additional questions or comments at this time? So I will read the proposal for the vote. A proposal for extended due date and extended payment period for the 2021 grand list motor vehicle supplemental tax billing in accordance with CGS 12-142, due date March 1st, 2023, payable April 1st, 2023. Do we have a motion? Councilmember Jen McMurray, thank you. Ready for the question. All those in favor show by the sign of aye, raising your hand or verbally.
Aye.
All those opposed have the same right. Any abstentions? The motion passed. We will bring this forward to the next Common Council meeting, which will be on Tuesday, January 24th.
Thank you.
Okay. Any other items, Lisa?
Not at this time, but
I
I
think
will
that
see you
covers
next
it.
month. Yes, thank you.
Okay, great. Thank you. Thank you very much. Okay, that moves us on to item 9, which is to receive the Oak Hills Authority monthly financial statement for November 2022 and the Oak Hills audited finance report, which was their audit report was included in our packet. The audit was conducted June 30th, 2020, completed June 30th, 2022. And we have Alan Dutton from the Oak Hills Authority to cover the materials.
Good evening, everybody. Alan Dutton here. So we had our audit for the year 2022. Not sure if all of you got to take a look at it. Our net position improved to $222,000. How did we get over last year? Our revenue for this last year was $133,000 higher than budget. Our operating expenses were $116,000 less than budget. And that accounted for $222,000. And we paid the city $268,000, I believe, for this current audited year. So I think a successful year from an operating and financial area for the authority. Don't know if anyone has any questions at all on that.
Councilman Brian,
Yeah, thanks. What is the cash position? If you add back depreciation, how are we doing on cash?
I think at this moment in time, we've got about $560,000 in the bank.
Beautiful,
Maybe
thank you.
I'm not exactly certain about that, but I know we are doing okay for cash. I think it's about 560 at this moment in time.
Okay, so 222 net position, and then probably about 300 in write down between the restaurant and all the other stuff.
Right, because this
Thank
is
you
our
very
final-
much.
Okay, thank you. Moving on to the month of November, and also then on a year-to-date basis. Month of November, obviously a quiet month for us. We are budgeted to lose $45,000 for the month of November. We actually lost $7,000, which is we were $38,000 better off. Basically, our revenue for the month was actually $12,000 over our budget. We were able to save about $25,000 on our expenses, showing up to make the $37,000 basically better than where we were. So another good relative month for us, a slow time. On a year-to-date basis, we are doing, after the first 5 months, we are basically, from a bottom line perspective, $194,000 better than our budgeted number, of which of the $192,000 is increases in revenue. Primarily our golf revenue compared to budget is up by $138,000. We experience a lot of out-of-town members. We have some new software with Golf Now. A lot of people are using our course, and we were able to reduce our expenses by about $42,000 compared to budget. The biggest item there was we had budgeted for a manager's position, which we had somewhat eliminated because we had the concessionaire also being the manager. We eliminated the manager's position. I was able to save some money there. So on a year-to-date basis, we find ourselves $194,000 ahead of budget on the bottom line. So doing okay so far as well. And that's the month
question.
year-to-date. Yes. Yes, sir.
Yeah, the report indicates that you applied for your line, extending your line of credit. What is the amount of your line of credit, and have you had to use any of it?
We have not. I'm not sure. I believe it's $200,000. We have not used the line of credit during my time. I've only been on the board for 2 years, though, so I wasn't there for the bad time. For the times when we weren't doing that well. The thoughts, I believe, behind this is that we are to have these good numbers, and that if we wish to increase it, we can. It won't be any extra cost to us. And I think we wish to take it up another $25,000 to $225,000, I believe.
Okay, thank you. Councilmember Nora Delsky-Eichner.
Thank you, Chair. So you mentioned the restaurant, which I note that, 6,000 of your over budget revenues was due to the restaurant, which is terrific. But also that you had budgeted for 0 for the restaurant. So, and I also, I heard you say that the concessionaire is also functioning as the manager. Without getting into sort of details that I know are potentially still being worked out, could you talk to us a little bit about sort of the health of the restaurant, the anticipated budget, returns from the restaurant going forward? If there are concerns about there being some conflict with having the restaurant, the person managing the restaurant and the person managing, the authority, the course for us being the same, just trying to get some sense of where things stand with the restaurant at the moment.
So, first point, when I got on the board there, they had established that the concessionaire, who are personal owning concession, would also be the general manager and be paid accordingly. However, that's we recommended to stop that about 4 months ago. So this is really why we're saving some money. That we do not have a general manager at this moment in time, because we Don, who was owning the concession, resigned as the general manager. So we do not have a general manager anymore. It probably wasn't good to have a general manager who also owns as a concession. So that was eliminated. Moving forward, we are currently in negotiation or talking to the restaurant to determine, next year changes in possible operation times, looking at things so that we can service our golfers and our members a little better perhaps than we did last year, looking at hours of operations. And we're currently in contract negotiations with him at this moment in time.
Okay, so negotiations are ongoing, and so
Negotiations are ongoing at this moment in time,
Okay.
yes.
and you anticipate that next year's budget will anticipate revenue from
100%. Yeah, we do anticipate we're getting some revenue from it. A lot will depend, obviously, on these negotiations with him at the moment.
Okay. And, eliminating a general manager position, I don't really know what the general manager's role would be. And so what are the risks we're incurring in not having someone in that position versus, what are the benefits? Obviously, the benefits are substantial in terms of saving $45,000, but are there risks that we run from having that position be vacant?
Well, speaking as a general manager of private clubs for the last 50 years, I'm a little biased on these items. I would say that Oak Hills definitely needs a general manager because it's a great place. We have a lot of disciplines there. We have a golf pro, we have a golf superintendent, we have a licensee for food and beverage, but we have nobody to bring it all together. And the authority would be great to have one person they could deal with. So I think that the authority is looking at the position as we speak at this moment in time and reinstating that general manager position, getting the right person for the position, possibly making it a part-time position only from, say, it wouldn't be a full-time position. But I strongly recommend that we will do this. And I think this is a track that we are looking to continue on because I think it's an important position to have at the club.
Okay, thank you. That's very helpful. So we also should anticipate that there is a reasonable likelihood that we will see that coming back on budget at some point.
I would like to think so. Yes.
Okay,
yes.
Great. Thank you. I appreciate the information. Thank you.
Thank you.
Any other questions or comments for Oak Hills? Okay, seeing none. Thank you, Alan, for the update.
Thank you.
And if anyone, I would encourage everyone to take a moment to look at the audit report, just so that you have that as background and current information. With that, we'll move on to item 10, which is the report of the tax assessor's office. We have Bill Ford with us. Over to you, Bill.
Thank you, sir. Good evening, everyone. As promised, we have two reports for the council tonight. One regarding the revaluation press release for the fiscal year, the Grand List 2023. We have an October 1, 2023 valuation date for our next Grand List, which will be published in January of 2024. The press release identifies that the staff of Vision Government Solutions will be out in the fields looking at properties, not actually in fields, but the field meaning the various locations within the city. They'll be looking at properties, they'll be measuring them. This is what we call a full measuring list, where they come up to the property, they'll knock on the door, ask for an interior inspection. They then will measure the outside of the property, the exterior dimensions, and they will be filling out and correcting any misinformation on the property record cards. That information is returned, and the more accurate the information, of course, the better the values are. The commercial properties are valued on an income approach, so we'll also be identifying income and expense statements that are filed with the city and reviewing those to develop those values. The press release goes into an explanation of the various approaches to value: the sales approach, which is used for the residential properties, income approach, and the cost approach. So the police department and our customer service departments are being advised as to the individuals that will be in the field with their motor vehicles, the license on their motor vehicles, license plates, numbers, etc. So that information, if anybody has a question from the public about a vehicle that is in their neighborhood, they call our customer service department, the individuals that are related to Vision Government Solutions, they'll be aware of those individuals. We are looking at inspections probably through the summer because of the size of the city, and developing values in the fall. Any questions regarding the revaluation?
One question, Bill. The individuals that will be coming to the resident stores, will they, I'm assuming they'll have an ID tag or you know, I mean, for someone to let this individual into their house.
They have identification. They have a letter notifying that they're working for the city. So we have an introductory letter for them, and their vehicles will have an assessment department notification on the dashboard.
So will residents get that notification before someone comes to their door? Or will someone just come to the door and say, I'm here to assess your property?
So the first attempt is just somebody coming to your door, because they're literally going around each block in the city. That's how it's done. And it's spread throughout the city, depending on the number of individuals they have available at different times. They'll have different people in different parts of the city. So the first attempt is just a knock on the door. If there's something about the property that the person believes they need a second inspection for, then a postcard or a letter is mailed advising them we would like to inspect the property. Please contact us to set up an appointment.
Thank you. Councilmember Jen McMurray.
Thank you, Chair Burnett. What if a homeowner is not home on the first attempt? How are they following up, and how is that scheduled?
That is the letter and postcard that I just mentioned that is mailed to them. It gives them a phone number to contact so that we can schedule appointments when they're available.
Okay, you had mentioned it was a second visit, so that's why I wanted to clarify. Thank you.
Oh, I'm sorry. Yes. So before the second visit, the letter is mailed.
Councilmember Nora Dujelsky-Eichner.
Thank you, Chair. I'll just admit, I totally did not, having not lived in the city when this happened before, I assumed that it meant an out of house. I literally did not realize that people were literally walking into people's homes, which makes the sort of heads up far more and even more crucial. Is there going to be some way that we can give people, I'm seeing the potential for scams and all kinds of risk here. Are people is there some way that we can say, like, expect them this week, or they're in this area, so that people sort of have some reasonable expectation? Yes, this person is in fact here on this kind of mission. I understand, they have a letter, but letters can be faked. Again,
As I said, they also have identification. So they have a Vision Government Solutions identification badge tag, and then the letter of introduction, so that shows that they're working for the city, not just somebody randomly coming to their door.
Okay. I'm glad you notified the police and the customer service. I'm anticipating, I have to admit, if someone walked up to my door, I would be highly unlikely to.
Where did you move from?
New York City. I lived in an apartment.
So yeah. Although New York does revaluations, they're all exterior. They do statistical valuations, and they just update the information on a periodic basis. New York is funny because New York State is funny because it requires that you assess at 100%. And then the law says that if you're not at 100%, the state will issue a percentage that you are assessing at. So,
Okay, thank you. Well, yes, no, so I will, certainly make sure that I notify my neighbors and have people sort of expecting this.
and Connecticut residents are a little more used to it because there's a revaluation every 5 years, and every 10 years, there's the physical inspections of people coming around and looking at the properties.
Yeah, and I would have just missed the last one. So I remember the piece of paper, but not someone coming into my house.
Bill, if there's a question, can they call Vision's customer service to confirm that the person is legitimate?
So they can. It would be better that they call the city. We have the list of individuals that are actually working in our jurisdiction. If they call Vision Customer Services, the customer service of Vision may not know where their various employees are working customer service may not know where those employees are working that particular time.
So they should call your department?
My department or customer service is the first step.
Thank you.
Any other questions related to revaluation press release? Okay, the next item that we have for you are the updated income figures. So at the last meeting, literally, I think it was the day before, the state had come up with the updated income figures for the elderly homeowner exemptions. And so the state figures, 1 second, I just want to make sure I do not misquote. Let me get that open. So for the state, they have.
I can share my screen if this helps. Is this the page you want, Bill?
If you can scroll down. So that's the city figures. Go a little bit further down. The state breaks out for single and married individuals, and it has 4 tiers of income ranges with a maximum reduction of $1,000 in taxes. For a single, the income for that is $20,200, and it goes up to $40,300 with a reduction of $250. The city has an increase on these amounts. We use multipliers of, if you could scroll back up, sir. So the city current maximum, we have a 2-tier system. Married or single does not matter to the city credits. We have a maximum of $76,500, which is a $900 reduction. This is for all taxpayers, property owners over 65 years of age. The additional requirements are time in the house and ownership. The lower tier, or the lower income limit, is $62,100 with a benefit of $1,500. So we, 1 second. We use the 2 different multipliers that we use. I want to confirm the median income as well for the area. So we're currently operating at about 84% of the median income for our area. That's what our exemption is calculating out at with the $79,000. Typically, and that's, we discussed limits a little bit at the summer presentation, where we discussed the number of people that actually received the benefits last year. And we discussed dollar amounts involved in other jurisdictions that may have different limits.
Excuse me.
So the census showed that the median household income in 2021 dollars for the city of Norwalk was $91,434. So that puts us at about 84% of the median household income to receive this benefit. If you look at many of the affordable housing limits, they typically run in the area of 80%. So at 84%, we're doing a little better for our seniors than typical affordable housing situations. And the purpose of our being here today is to try and get the word out. We will be mailing renewal applications for any of the existing beneficiaries. So any taxpayers that currently receive the benefit will be receiving a renewal application. We send those out at the end of this month. Filing period is February 1 through May 15. Chairman, you look like you had a question.
No, I was just adjusting my chair. We do have two hands raised, Councilmember Nora Nadelsky Eichner and Brian Meeks.
Henry?
Yeah, I just want to clarify, you mentioned a city program and a state program, but
Yes, sir.
we pay for both. It's just the state mandates it, right?
Yes, sir.
It's not like the state is giving money to help our seniors. They mandate a certain amount, and then in addition, the city has a program so that we are paying for all of these benefits to help our seniors.
Yes, sir. The state quite often comes up with these mandates, and for a period of time will provide some reimbursements. Most recent one that they're doing that on was the motor vehicle tax. They put a cap on the tax rate on motor vehicles. We were not large enough to have a situation. Our tax rate for our motor vehicles wasn't high enough that we reached the cap. But areas like Bridgeport and other areas, they were receiving a stipend from the state to offset the difference. And typically those stipends go away or a short period of time after. That's what happened with the elderly as well. There was a reimbursement from the state for a period of time, but now it's all on the city. The city pays 100%.
Thank you.
Councilmember Nora Nadelsky Eichner.
Thank you, Bill, and thank you very much for that clarification as well, Henry. I do think it's really important that we get credit for the work that we do here. And I mean, the state mandate levels are literally laughable. I don't know what $150 does over the course of a year to help almost anyone. But I just wanted to confirm my understanding from our conversation this summer. The $1,500, the $900, those are the maximum we can offer under state law. So we cannot increase that number if we want to.
Correct, ma'am.
Okay.
The thing that we can increase is the income, and we've done that. The council did that in 2019 was the last time that they increased those factors. Since we're at 84% of the median income, I would not personally recommend an increase to those factors at this time.
Right. I mean, I think if I had my druthers, would be more interested in increasing the amount of relief. Feels like it would be more impactful overall to the city. But it is frustrating to hear, like so many things, that is a state law challenge we need to overcome. So thank you.
Yes, ma'am.
And I really appreciate you following up with these numbers, by the way. This is very helpful.
Councilmember Brian Meeks.
Thank you, Chairman. First of all, let me say I'm a huge fan of this program. I don't think the city goes far enough. I couldn't think of a better use for the rainy day fund other than surveys at the school system. And in any case, Westport is far more generous than we are. Naturally, they can afford it. I know they abate up to 80% of total property tax liability for some seniors. So anyway, let me dive into my questions, of which there are several. My first is, will the application and instructions be prominently displayed on the website apart from mailing to seniors?
Yes, sir. We have a separate page for the exemptions. The elderly application is available there, and the flyer that you have attached to this memo is also on the site, explaining all of the factors required to qualify. Okay,
thank you. And the next question is in regard to conveyance and transfer of real property. I don't know if this is between the clerk's office or your office, but I understand that we are way far behind in recording the assessments. And my concern is that somebody who doesn't qualify for the program either buys or acquires through probate a property that they are not qualified to receive the discount for. And if in the event that were to happen, does the city have recourse to get that money back if, for example, we did not correct the assessment and the credit and collect the proper amount of property tax? Thanks.
In the state of Connecticut, we have the right for a correction of errors to go back up to 3 years. So yes, we can. So let's say that a probate document was never recorded, which we've had those situations. As you know, the probate can happen in another jurisdiction. It's never filed in our local jurisdiction at the town hall, at the city hall. We have seen situations like that. As far as deed transfers are concerned, my office is up to date by about 10 days, 2 weeks maximum. So I don't know what that's in reference to. I know that we're up to date on the deed transfers. So we can go up to 3 years back if there's a situation where we discover that something was not recorded or an exemption was granted that was erroneously provided.
Thank you.
Question, Bill. Those seniors that have received the assistance, once they receive, it's good for 2 years. Do we do a direct automatic mailing to those to notify them that they have to reapply? Okay, great. Thank you.
Yeah, as the mailing will go out at the end of this month because the filing period is February 1st through. And since it's based upon the 2022 income information, if we mail it to them too soon, they basically don't have the information they need to file. So that's why we wait until that time period.
Great. And I'm assuming there'll be notification, info sessions if necessary at the centers and other areas where there's a large population of seniors, so they're aware of this to apply if they have not applied in the past.
Our senior center is really good at getting this information out to our seniors as well. The program is very well known. It more becomes an issue of those that qualify and those that don't.
Great. Lisa B., have your hand raised.
By state law, the maximum that a city is allowed to abate under the elderly program is 75%. If there are other jurisdictions that are abating more than that, it's in violation of the law. I'm familiar with what they do in Westport. It's my understanding that they are in violation when they do what they're doing. They're probably not the only one, but what we try to do in Norwalk is we do try to follow state law because taxation is actually a state power that is granted to the municipalities under certain parameters, within certain parameters, which is why we follow a uniform fiscal year and follow other guidelines or directives of the state. So we don't want to risk any of the other benefits that we get from the state of Connecticut by making a program that does not fall within the parameters that they tell us. We also have a deferral program in Norwalk. There's very few people on it, but William's office administers that program as well. But even with the deferral program, the maximum amount of credit by that.
And as Lisa said, there may be other jurisdictions doing certain things. Those other jurisdictions do not receive potentially some of the state funding that we receive, because that's what you're in violation. If you're in violation of certain things, the state doesn't provide you the funding that they would normally provide that the jurisdiction would qualify for. So there are jurisdictions I've heard is that since they don't receive any state funding, there's no penalty to them for doing the things that they're doing.
Councilmember Brian Meeks. You have
I
your
just
hand
wanted to
raised?
say thanks, Lisa, for my edification. And the 80% number I threw out was just kind of a guesstimate, but I know it's very generous what they do next door to us. And if it's over 75%, I don't know exactly, but I think I pay more on my truck than some people do on their houses over there.
Councilmember Nordzijewski-Eichner.
Can I ask just another question about that, just to make sure, scraping the barrel that we're really doing everything? So I would be surprised if $1,500 reaches 75% of very many of our homeowners' tax bills. Maybe I'm wrong. But so is there something else we could do that would still keep us within the 75% that could yet increase the relief we're providing to folks? Or
So the 75%, and again, it's not happening in Norwalk yet because we're giving the $1,500 off. If, let's say you had a tax bill of $1,800 and you had a $1,500 exemption, if that exceeded the 75, you're supposed to pay 25%.
right,
So if it exceeds the 25%, your exemption is capped at whatever it would be. So in the case of, if it's a $1,600 tax bill, you're only going to get a $1,200 exemption because you can't get more than, you have to have that.
I see, but
25%.
it's not that we could create other routes of getting to that 75% if we wanted to. That's merely a limit to our ability to offer the 1,500.
Both the authorization to tax and the authorization to exempt come from state law. We don't have the ability to write our own. And again, as I said, the penalty if you violate certain things is the jurisdiction does not receive state funding for, basically they can remove any of the state funding that they provide.
Right, which is obviously not an option for us. I mean, Westport is in a very
Correct.
different situation than we are in that
Correct.
regard. But I just want to make sure that I was that I wasn't anything I was missing there in terms of opportunity. Thank you.
Henry, you have your hand up?
Yes.
Yes, please. If this is the appropriate forum while Mr. Ford is here, Brian, there have been some comments made about our business personal property tax, and I wanted to clarify that a little bit. You seem to imply that we have a line item of revenue for personal property tax in our budget, and that we made a very big blunder by being short by $6 million. I'd like to clarify, and I'd like to let Bill add after I finish. We do not have a line item for personal property taxes anywhere in our budget. What we do is we take all of the expenses that we need to cover because we are a balanced budget, and then we make additions. So for example, when we have credits like this elderly credit, we increase the amount of money we need to raise in taxes because those people aren't going to pay. We have an allowance against doubtful accounts for the 1.4% we estimate who don't pay. So we add that $5 million also to the amount we have to collect. And then we deduct all of our revenues. We get something Lisa has taught me, it's called net tax levy. After all the pluses and minuses, this is how much our tax bills have to generate. What I then do is I speak to Mr. Ford, who gives me the grand list. He does it for the motor vehicles, which is done separately, and he gives it to me for the rest of the grand list, which is real estate and personal property. We take that grand list and divide it into the amount of money, the net tax levy, and we get our mill rates. And then when you multiply the mill rates times the average value of the home, that's the amount of tax bill on average, whether it's for the city as a whole or for the individual tax districts. So what happened was there was a decline in the amount of personal property assessed value from the time we established the budget as we go through the year. And I'd like to let Mr. Ford elaborate on what created those reductions.
So as we discussed in the budget, the adjustment to the personal property was due to basically COVID. So if there were no additional items purchased, the personal property is done on a basically straight depreciation schedule. So if no additional items are purchased because shipping problems, delivery problems, all kinds of things that were going on, you didn't have as much new equipment being acquired. The old equipment that's there is being depreciated more each year up to a final minimum percent good. So you're going to see reductions if there's no additional acquisitions. You're going to see reductions during that time period. Now, the other thing that happens, like Henry said, we don't have a division between real estate and personal property on our budget. But what we do is, at the same time that personal property was going down during COVID, we had a number of people doing renovations and we had new construction going on in the city. So our real estate side was going up more. So it offset. We don't have it broken up the way that it was discussed. So one offsets the other, and that happens all the time. We're actually giving, so we just gave a proposed number for the fiscal 2023-2024 budget. We don't have that assessment roll, grand list completed yet. So we're projecting what we believe will be happening. The other thing that's happening is the motor vehicles are switching from a average retail value to a straight line depreciation. So we're going to be seeing in the future a reduction in the motor vehicle values. And we've provided a projection on that based upon the current vehicles that we have where we know the MSRP and we know their current retail value. We looked at the percentage difference and came up with a proposed reduction. This information is reviewed constantly, and we have discussions regularly to try and project the best information possible.
And I would just add to clarify on the motor vehicle. So we had a problem last year, as you're aware, during COVID, that there was a shortage of both new vehicles and used vehicles. So since the assessor had to use the value based on transactions, the value of our motor vehicle assessed values went up, which is very unusual because normally there's depreciation. And that's why this past year, many people were surprised when their motor vehicle bills went up rather than went down.
Henry, you still have your hand up? Did you
Oh,
have
I'm
a
sorry, no, I
comment?
had to lower my hand. Thank you.
Okay. Oh, great. Councilmember Nora Nadelski-Eichner.
I admit, I don't think I really understand that explanation. I'm looking at Lisa's report, item 8, which is page, let's see, middle of the packet.
This isn't really related to Lisa's report. This is related to the questions about the budget and the personal property line.
I think and now I can't speak for Councilmember Meeks. I don't know what Councilmember Meeks was referring to, and it probably would have been more appropriate to wait for Councilmember Meeks to raise a question before launching into an explanation. But given that we started the explanation, I will follow up to say that I myself was looking at the tax collector's report, and I'm looking at the personal property line, and I am seeing that there was an original levy of $26 million, and the corrected levy now is listed at 21 million. So that's a fairly substantial change over the course of the 6 months we've had so far. So is the explanation you're offering about a rebalancing between the personal property and the real estate, explaining the difference in those two lines?
So the other thing that happens during the year, as we potentially discover settlements with property owners, we have reductions in personal property and real estate. But we also have increases in real estate if we have a situation where, so if the renovations are done on a property and we have this certificate of occupancy issued, I'll just use January 1 because it's the easiest date. You have 6 months of taxes that are due on that renovation. So we have tax bills going up. They get a prorated bill for that time period of when the certificate of occupancy is issued through the end of the year. So that's what we're talking about is, so you will have reductions and you have increases on the other side.
Sure. So, but if I'm looking at this line here, so the real estate line, we've had a net change in levy of $3 million on a $315 million levy. Personal property, we've had a net change of $4.4 million on a levy of 26. So that's a huge percentage change in the levy. So I guess the question is, have the city suffered so much in settlement losses? Why is the change? Why is there such a large percentage of the levy change for personal property in comparison to, for instance, real estate?
So we had one large personal property where the leasehold improvements were recorded. So the construction of the building was recorded as a leasehold improvement in our building department. Leasehold improvements are taxed as personal property. And we discovered that it was actually the construction of the building. And it was a negotiated settlement. We had their building, and I'm going to use round numbers, at $50 million. And they were looking at for more off of the personal property than off of the building. And it was a negotiated settlement. So that's basically where it came from. And it is better. It's also better for the city to have it come off of the personal property, because as I said, there's no additional, it's a straight line depreciation. So that value would go down every year if it was all on the personal property. We prefer to have it on the real estate where the value stays the same, basically from the settlement through the end of the revaluation cycle.
Certainly, and that makes a great deal of sense to me. It certainly would seem preferable. So the majority of that difference between the original and the corrected is due to a single settlement that the city chose to make in fixing, as you said, this sort of incorrect assignment of how that construction
Improvements versus value. Yes.
Okay, great, fabulous. Thank you. I appreciate that explanation.
Yes, Lisa.
Answering your question, Councilmember Nadzelski-Eichner, in my narrative, I also draw your attention. I try to give the narrative to explain the numbers that are on the spreadsheet. So you're definitely looking at the change in the levy. I'm basing my collection rate in the far right column on the corrected levy, which is a more true number for me. The CFO uses the original levy when he's coming up with the mill rate and preparing the budget. But as the year goes on, as William Ford explained, there are changes up and down all the time. The lower part of the report, where it discusses prior year's collections, you'll see that this particular month, I've got a negative there. And what has happened is we were drawing your attention to this, and the CFO will tell you it's budgeted for, but I still need to disclose what's going on. In spite of all that we have collected on our prior years, fiscal year to date, my net collections are negative because of credits that were issued and processed through these court stipulated settlements. So these were appeals that were going on over multiple years because our last revaluation was in 2018. So you have payments that were made on the 2018, 19, 20, and 21 grant lists. And those taxpayers are now receiving a settlement where they've basically overpaid their prior years and now are entitled to the credits. We're pushing those credits forward onto the current grant list. And in some cases, we have to refund their money on prior grant lists. So there were so many of those settlements that were worked through. That's been discussed at prior meetings, that how many of those court appeals were going on and how many have already been adjudicated. But my point is that you can see that in spite of everything that we've collected on our prior years, fiscal year to date, I'm still showing a negative as of this month. And I'm hoping that that might, is going to change as we go forward in the fiscal year. But because there were so many credits, That's why that number is negative. And we just wanted everybody to be aware of it because there was definitely a lot of money involved with those prior years.
No, and I
hope
very
that
much
helps.
Yeah, no, and I very much appreciate the transparency and the explanation. But yes, I mean, we're aware, and I know that there was a lot of thought given to this year's RFP for the reeval, for hopes that we will have far fewer contests and settlements, for this year's reevaluation. And certainly why we also want to get the word out so that people are letting people into their houses, and we are fostering as much accuracy as possible. So.
As I've discussed with Henry, just to let you know, I expect similar numbers of petitions at the court because this is a cottage industry now. It was very much so in New York previously. It's moved slowly into Connecticut. Henry can tell you horror stories of Nassau County. I could tell you horror stories of other areas where there are companies that they're taking these petitions on a contingency of 50, 75% of any savings they provide. So they file no matter what, and then we go through the procedures of, okay, and they can get an appraiser to say, hey, this property should have a 10% cap rate, and we have it at an 8% cap rate, and the court will cut the baby in half. And that's how we end up with some of these settlements. But I anticipate a similar number of petitions to the court. I don't see as many large payouts going forward.
And which is where the greater accuracy, I assume, comes in. We will have a stronger ability to contest them. So
Yes, ma'am.
I would also add, Lisa keeps adjusting her denominator of what 100% collection will be based on the pluses and minuses throughout the year. Budgeting, we have a budget that gets approved in April, May, and we have to set numbers, and we can't move the goalposts. So what happens is we set up an allowance for accounts where we don't believe we're going to collect the billed amount. When we have adjustments, whether it's adjudicated or a settlement, much of the time we just handle it prospectively. We will adjust the assessed value, and going forward, the tax bills will be reduced. But as Bill and Lisa have both mentioned, if you're going back a couple of tax years, we have to write the check. That's what the budgeted item allowance for doubtful accounts is designed to do. With Bill's advice, we're on a 5-year cycle of assessments. So the first year after a reassessment is generally the largest number of adjustments. And the first 2 years we keep at a certain level, and then the next 3 years we reduce it on the assumption the largest ones come first and the quantity is up there. And we try to manage the allowance in relation to what's going on in the challenges to the assessments. But as Bill said, I was treasurer of Nassau 20 years ago, and that cottage industry was 5 law firms, and it cost us hundreds of millions of dollars, and New York State gave us money to try to settle and clear that up. So I'm quite familiar with it. The problem for us is that it increases the workload of the assessment office. We really would prefer to have 100 cases or fewer, but if we will continue to have 400 cases every time we do an assessment, we might need staffing to increase a bit.
Any other questions, anyone? Thank you for having me.
Thank you, Bill. We appreciate the information. With that, Henry, unless you have any further comments related to what's happening with the budget cycle, we can move for, I see Nora, Council Member Nora Najelski-Eichner has a hand raised.
Sorry, I'm full of questions today. Are we going to have an opportunity to discuss and ask questions about the audit? I really appreciated, Chisame, you sending that around to everyone. But there wasn't a line item for it tonight, and so I assumed you didn't want to discuss it this evening.
There's usually, I don't know whether we discuss it in this forum. There's usually an audit committee that,
Correct. There's usually, there's an audit committee that reviews it, and we typically do not, well, we have not discussed the audit at the Finance and Claims Committee meeting, but there is an audit committee that conducts a meeting, which Chitsime coordinates that meeting. I believe it's a public meeting, so anyone is open to attend that meeting.
it's a public meeting, and I would add that our auditors are present to answer any questions as well. Usually it's in the spring.
Okay,
Right.
so you will get an email when it's been scheduled.
Sure.
Great. Fabulous. Thank you. I appreciate it.
Okay.
With that, so any comment, Henry? If not, that, you know, you're not
I would just say,
obligated.
I mean, I mentioned it in the joint meeting before this one. We're on schedule. We had our second public joint meeting with the Board of Ed for the Finance Committee earlier this evening. From an operating budget point of view, in the second week of February, the mayor and I come out with our recommended operating budget. And I believe it's January 31st is our deadline for me to issue the transmittal letter with the CFO recommended capital budget, which then goes on to the Planning and Zoning Commission, comes back to the mayor for his recommendation, and then goes on to the council and to the Board of Estimates. So we're on schedule with our calendar. No news to report.
Okay. Great. With that, motion to adjourn.
Motion to, oh, you don't need me? Okay. I was
No,
about to
I'm
say
asking
it.
for a motion to
Oh,
adjourn.
motion to adjourn. I got you. Motion to
Uh,
adjourn, Greg.
Jen, have your hand up for a question or I'm not sure. Okay. So Diana moves for a motion to adjourn. All those in favor, show it by a sign of raising your hand or aye. All
Aye.
those opposed have the same right. We stand adjourned. Thank you, everyone.
Good night,
Have a
everyone.
great rest of your evening.
Have a good